Bitcoin price sees hell of a reversal candle as 168,000 BTC leaves exchanges. Bitcoin experienced a resurgence on May 13th as bulls took the market to new heights, achieving nearly $31,000. Data from Cointelegraph Markets Pro and TradingView confirmed 24-hour gains of 30% for BTC USD in the aftermath of the Terra debacle. This is an amazing achievement and proves that Bitcoin is still a strong currency. Bitcoin's price surged to $24,000 yesterday, but today it seems to have kissed that level goodbye. Despite this, the overall volume of Bitcoin transactions is still breaking records, and large numbers of coins are being transferred off exchanges. Around 24,335 BTC was transferred on May 11th and 12th from exchanges to other wallets, according to data from CryptoQuant. This indicates a significant decline in exchange balances. During the same period, outflows from Bitcoin were at nearly 168,000 BTC. However, inflows from those seeking to sell were just as intense as people panicked over Terra's Luna and Terra USD, or the UST tokens, as well as Tether USDT, the largest stablecoin. As Luna went to nearly zero and its blockchain was halted, Bitcoin nonetheless strengthened as the immediate impact of the instability waned. This is a hell of a reversal candle, popular trader and TradingView author Crypto Bullet reacted as part of Twitter comments. Bitcoin's RSI is currently at 31, which is still in oversold territory and its lowest since January. As the dust settled on Terra, Luna, and UST, however, not everyone was convinced that the worst was over. Among them was the official @Bitcoin Twitter account, which, like several others, noted that even the week's lows did not represent a classic maximum drawdown versus all-time highs. Here are some tweets from Crypto Bullet, some charts here, what they think this is the local bottom, expecting a bounce. The BTC USD one-day candle chart. As Cointelegraph has reported, MicroStrategy, the company with the largest Bitcoin treasury, hinted that it would buy into any significant weakness toward $20,000 in an attempt to support the market. So we will see how that plays out for sure. Up next here, we have Robinhood shares a spike 30% after Sam Bankman-Fried buys $650 million stake. Sam Bankman-Fried, the billionaire founder and CEO of cryptocurrency exchange FTX, has acquired a substantial 7.6% stake in the popular online brokerage Robinhood. The news of Robinhood's new venture was well received by the market, with the company's stock price initially spiking over 30% in after-hours trading. At the time of writing, the price has leveled off to a 24% overall gain. Robinhood has just received a major investment. According to a securities filing made with the United States Securities and Exchange Commission, Bankman-Fried purchased a total of $648 million in Robinhood shares at an average price of $11.52. The purchases disclosed by Bankman-Fried reportedly began in mid-March and continued until Wednesday. Bankman-Fried makes it clear in the securities filing that he has no intention of taking any action toward changing or influencing the control of Robinhood, and that this move is just because he sees Robinhood as an attractive investment. Robinhood's communications team tweeted the news that their company is also investing in Facebook, just like Bankman-Fried did in his securities. Here's some tweets from Robinhood comms. They reached out to their 82,000 followers, letting them know that they think it is a great investment too. The transaction was executed by an Antiguan firm called Emergent Fidelity Technologies Limited. Bankman-Fried is the sole director and majority owner of this company. Robinhood investors likely felt a sense of relief when the company's stock price reached a new low after revealing that its crypto transaction revenue fell. The relief may be short-term, however, as the brokerage firm's crypto transaction revenue continues to fall. So, we're in a down market. I think, even stocks. Some stocks are down, crypto's down, everything's falling down. I think that, it's not really something to worry much about. Robinhood has been expanding its presence in the cryptocurrency market as revenue from stock-related trading has decreased. Robinhood currently offers its users the ability to trade cryptocurrencies, making it compete directly with other US-based cryptocurrency exchanges such as Coinbase and Gemini. According to Robinhood's Q1 2022 report, the company made $54 million from crypto-related transactions in Q1. However, this is a 39% decrease from the $88 million the company made in crypto-related transactions in Q1 of 2021. Last year in April, Robinhood announced plans to expand into cryptocurrency by purchasing United Kingdom-based crypto company Ziglo. This month, Robinhood announced the rollout of its crypto wallet to 2 million waitlisted users and outlined plans to integrate the Lightning Network. It also listed Shiba Inu after months of campaigning from its supporters. So, if you're interested in Robinhood and you've been thinking about wanting to get in, now might be a good time. As big names invest and prices drop, I think that's just, in my opinion, good news to come, that eventually prices will rise with, good support and good backing. Up next here, SEC's Hester Peirce says new stablecoin regs need to allow room for failure. I think that is a good point to make, right? As new regulations come, there's gonna be things that need to be changed. Commissioner Hester Peirce, also known as the SEC's crypto mom, believes that a regulatory framework for stablecoins should allow for room for there to be failure. Peirce commented on U.S. regulatory agencies' actions toward cryptocurrency at an online panel on May 12th, hosted by financial think tank, the Official Monetary and Financial Institutions Forum. She said that while regulators are paying attention to crypto, they are not trying to ban it. Peirce answered that she has urged the SEC to use its regulatory powers to provide exemptions to particular technologies, which would allow for important experimentation. One place we might see some movement is around stablecoins, Peirce said. This week, officials in the U.S. Capitol mentioned the depegging of the algorithmic USD stablecoin, Terra USD, or UST, early this week. United States Secretary of the Treasury Janet Yellen said at a Senate hearing on May 10th that a consistent federal framework on stablecoins needs to be developed in light of the situation. In a statement on Thursday, May 12th, Yellen said that the stablecoins depegging from the US dollar were not a threat to the country's financial stability. At this point, stablecoins are not a major part of the economy, so a price drop would not present a risk. What do you guys think? You think that that's a true statement? Do you think that she's wrong? Do you think, what do you guys think on this depegging of the stablecoins? The market capitalization of the top 5 USD stablecoins is over $154 billion, or around 11% of the $1.36 trillion total cryptocurrency market cap, according to figures from CoinGecko. Speaking further on the regulatory environment for stablecoins, Peirce said that regulators need to be mindful that the term covers a variety of assets. There is a lot of variation in stablecoins, so it's difficult to craft a regulatory framework. Each stablecoin is unique, so you can't just apply a one-size-fits-all approach. She added that the regulations try to cover what exists today, but also what is going to exist tomorrow, and that's not easy to do. For sure, right? I mean, crypto is always changing. There's new coins being added, new projects, ones that, kind of fall off. Like, it's always being changed. New exchanges are coming on. Regulations are changing. Countries adopting them are changing. So it's going to be an ongoing thing until, they really get a grasp on it. And they need to get good tech minds behind them in order to do so. Up next here, Coinbase junk bonds tank amid market rout and creditors' fears. Coinbase's junk bonds are tanking amid an underwhelming performance in Q1 and fears over what could happen in the event of a bankruptcy. According to bond trading data from Trace Bonds, Coinbase's junk bond offerings have dropped about 17% and 5.2% since its Q1 report on May 10th. As of the time of writing, they sit at $63 and $62.31, down 20% and 19% apiece since the start of this month. Junk bonds are a type of corporate debt issued by firms that do not have high credit ratings. When firms want to borrow money, they often turn to junk bond offerings because the interest rates and maturity dates are set in advance. As junk bonds have a lower credit rating, they command higher interest rates than investment-grade corporate bonds. In Coinbase's case, it raised roughly $2 billion in September across two evenly spread offerings at 3.375% over 7 years and 3.625% over 10 years. Coinbase has been experiencing a sharp decline in confidence from investors as of late. This month, the company's junk bond offerings hit an all-time low at $100 each. The trend suggests that people are skeptical of Coinbase's ability to succeed in the future. And here is a tweet out, the 10-year Coinbase bonds trading at 63 cents on the dollar. There it is, down. Coinbase's Stockcoin has seen a price drop of 20% since the company released its Q1 report. Investor sentiment was already bearish before the report, with the stock dropping by 50% since the start of May. According to the major crypto exchange's Q1 report, they suffered losses of $430 million and a 27% decrease in revenue. Shortly after the report was released, people became concerned over a disclosure that user assets may not be protected if the firm goes bankrupt. The disclosure noted that if the company were to go bankrupt, users' digital assets held on the platform may be subject to bankruptcy proceedings and could see them treated as unsecured creditors. Some Coinbase users are concerned about their assets in the event that Coinbase dissolves. Bondholders, on the other hand, are worried that users could still have a claim on Coinbase's assets, putting them at a disadvantage. Coinbase CEO Brian Armstrong attempted to squash fears, however, after he noted on Twitter that they have no risk of bankruptcy. However, they included a new risk factor based on an SEC requirement called SAB 121. Yeah, they tweeted out, or a news article or something like that came out about that. Like the Coinbase holdings could go to, be theirs if people could lose their money basically if they filed for bankruptcy. And I think that was not a smart move because people are just going to be trying to get their money off of that. The CEO assured employees that the company can handle the current market downturn. Armstrong said that this last bull cycle has been great for profits and cash flow, which makes them more resilient. They have also assembled an incredible team with some of the best talent in the world. So, they're pretty confident in where they stand, that Coinbase is not going anywhere. They're not going to file for bankruptcy. So, what do you guys think? If you have Coinbase, your stuff on Coinbase, you think you're trying to move it off, you keeping it on? I'm interested to know. Up next here, analysts say Ether price must hold this key level to avoid a capitulation-like move. The crypto market experienced another tough day as the fallout from the Terra's Luna and UST failure continues to ripple across the ecosystem. While UST and BTC have received a lot of coverage in the past few days, the pullback has also had a significant impact on the price of ETH as traders hastily exited the market. Ether prices have been dropping recently, with the past 7 days of selling seeing it reach $1,701, its lowest price since July 2021. Ether experienced a dramatic plunge in value overnight, with the price dropping to the low $1,700 range. This was documented by crypto analyst and pseudonymous Twitter user Wrecked Capital, who posted the following chart outlining the major support and resistance zones for Ether. And here is the tank, here is the chart there. Rex Capital said that if Ether can't rebound strongly from here and close above the black $2,250 level, the $1,720 level will reveal weakness and may not hold price. Crypto Ferris recently tweeted about Ether's price action, suggesting that it's not too far-fetched to think that it could go even lower. He points to Ether's value just a few weeks ago as evidence that this could be a possibility. Market analyst Caleb Franzen suggests that a bearish breakdown below a major trendline could occur for Ether's price action. Franzen believes that there's a high chance that the January 2018 highs will be retested in the next 24 hours. If we break below that former resistance level, that would be a bearish sign. The cryptocurrency market has a total worth of $1.219 trillion, and Ether accounts for 19.2% of that. So they have some more info here, possible short-term retest. A lot of charts if you want to dig deeper into the ETH price action, technical analysis, you can definitely do so. That's just an overview for you for now. And last but not least here, Shanghai court affirms that Bitcoin is virtual property and subject to property rights. A district court in Shanghai ruled in favor of the owner of Bitcoins in a case involving an unpaid loan. As a result, the court decided on Bitcoin's legal status. The Shanghai People's Court has released a statement saying that Bitcoin is subject to property rights laws and regulations. This ruling comes from a lawsuit filed in October of 2020 by a person who loaned 1 Bitcoin. The court found that Bitcoin has value, scarcity, and disposability, making it subject to property rights and meeting the definition of virtual property. That's pretty big. I think that can make some decisions involving crypto, better in the future. The Shanghai Baoshan District People's Court ruled in favor of plaintiff Chang Mao, ordering defendant Shi Mumu to return the Bitcoin. When the defendant failed to do so, the case was returned to the court, which held a mediation in May of 2021. Since the defendant no longer had possession of the Bitcoin, the parties agreed that the defendant would provide compensation at a discount from the value of the Bitcoin at the time of the loan. It's pretty interesting. No current value could be established for the loaned Bitcoin since its trading is banned in China. The case was also complicated by the limitations of court investigative and enforcement authorities. Limitations of these authorities restrict their ability to investigate virtual property. China began cracking down on cryptocurrency trading in 2017. The government gradually disconnected cryptocurrency miners from the power grid and increased regulation of crypto markets. It has now turned its attention to NFT-related illegal financial activities. China is leading the way in developing a digital yuan, which is seeing widespread use even with COVID restrictions in place. The Beijing Winter Olympics was the first time this currency was used on a large scale. So that is pretty cool. Interesting that they're cracking down on Bitcoin and crypto, but developing their own currency. But this is this is big that they did recognize Bitcoin as property and like that there's a legitimate case for someone not paying someone a Bitcoin that they borrowed. So yeah, I think big things are happening. Thank you guys all again for watching. Make sure to like, subscribe, hit that notification bell, and we'll see you next time.